Well, now, this is a question that I always get each and every time. Somebody asking me or people asking me, now, what's the best between a Sacco or Saccos and money market fund? Which one should I pick when I'm starting up? And what factor should I consider when I'm starting up? I've never invested before. What should I do? All right. Now, if you've been asking all those questions, now, this is the video for you and this is the time for you. Let's be able to see the difference between the money market fund and the Saccos. Which one are you supposed to pick and what do you expect from either or from each of them, right? So let's get into the business. But don't forget, if you don't want to miss any of my good videos in the future, subscribe to this channel. How do you do that? Down below there, click that subscribe button and like this video as well. Get to the business. Now, the very first point that we're supposed to understand, we are talking about Saccos, and here we are talking about money market fund. That's how we abbreviate it, like MMF. Now, the point is this: what's the difference between the two? Which is which? Which is the best? Which one should I start with? Now, before you actually decide to get started with Saccos or MMF, there are some questions that you need to ask yourself so that at least you can get the best decision out there. Why do you want to invest? What do you look forward into having or getting or achieving when you want to invest your money? All right. Let's say we have person A. We have person A and we have person B. Now, these two individuals, they want to invest, all right? Now, let's deal with person A. Person A, all right? Person A, what they are looking for, they want to get a loan in future. They want to get a loan in future, all right? B, this person still, out of his investment or her investment, they also want to fix their money. They want to fix their money, meaning they don't want to withdraw. None withdraw, all right? D, they're looking, let's say, a little bit of what we say, it's a little bit risky. When I say risky, I don't mean like it's quite risky. I say a little bit risky, but has what? High returns, okay? Right. Now, at this particular point, this individual, when they present you with this kind of three things, this is just but three things, yeah? They can't be more than this. They want a loan out of their savings or out of their investment. Again, they want to fix their mind. They don't want to withdraw it like anytime they want it. And again, they want a little bit of a high returns. And of course, means a little bit of riskiness involved in that specific area. So at this particular point, that what fits person A. Have you guessed it already? Is it Saccos or MMF? All right, you've guessed it right. This individual needs to get into the Saccos. Why? Because Saccos, they tend to have high kind of interest rate, because you see with Saccos you usually have three accounts. We have the share capital account, which gives an interest rate of close to 13, 14, 15, some even 70, some even 20. But again, I always tell you people, never, ever be fooled by big percentages. Sometimes it can be deceiving, and baadaye in Swahili tunasema ulilia kwa choo. I always say, you would rather promise me 9% that I am sure I will get it at the end of the day. All right? Rather than promise me 20 or 13% or 17 that I'll never get it. So never be fooled by big percentages. Just because a company is offering big percentage does not mean it is a good one, it is a great one, and all those factors. All right? Now, see, this individual, these are the factors that you have to consider with Saccos. You see one thing, Saccos usually offer loans. If you are like one day you're looking forward into getting a loan, okay, you can be able to get into a Sacco, be able to fix with them, invest with them, and then be able to get a loan in future at that period of time. They usually say if you invest with them like 3 months, you know, they can give you 3 times of your investments and something of sort. So Saccos will be more appropriate for this individual who is looking forward into doing this kind of a thing. All right. Again, you see, you getting a loan from a Sacco depends. You can actually they tell you to front 4, you know, guarantors for you to be given a loan, or you can guarantee yourself, or some Saccos actually are opening door for what we call the collateral. You can use a logbook, you can use a piece of land, you can use all those things, we call them collateral, for you to be given a loan out there. Now, let me now explain the MMF so that at least we'll be able to draw a difference between the two and see what is best for you, all right? Because you is not me and me is not you. So we have different reasons why we are investing. Now, on person B want to invest in an area whereby, yes, he want to access his money, be able to access money, be able to access his or her money, right? Therefore, money market fund is quite fitting for that. The other thing is that this individual want to invest in areas where are less risky, okay. Okay, you see one thing with MMF or money market fund, they are actually regulated by CMA, that is Capital Market Authority of Kenya. Now, this body regulates the money market fund, and this money market fund are instructed to invest in 3 areas. The areas that they are supposed to invest they are supposed to invest in areas that we call FDS, that is fixed deposits in banks. The other area that they are supposed to invest is what we call the T-bills or the treasury bills, because these areas are quite safe. And the C, or the other part, they're supposed to invest in things that we call commercial paper. All right, commercial paper. These are paper that are used, documents that are used by companies when they want to secure what we call the securities or money. So the point is this guy is looking forward into getting what we call don't want to work. You want to access their money anytime they want, a less risky environment. And again, they're also looking forward into maybe having what we call sinking fund. Maybe they want to have what we call sinking fund. You see, there's something called sinking fund. Sinking fund is that amount of money that you set aside because you are anticipating something. Actually, MMF can actually be used for education purposes. All right, man, sometimes I don't know why I usually find it far much better compared to education policy. Yeah, but I don't want to draw a war here. Yeah, I know we have some insurance guys here and what have you. We respect them. They are quite amazing people. But personally, I would prefer getting my money into the MMF in terms of, because I'm getting quite a big interest and what have you and all those kind of things. Yeah, I always love to put my money where my mouth is. So anyway, the point is this. You can actually use it as a sinking fund, okay? You can also use it as an emergency fund. You can actually use MMF as an alternative of your bank. All right, because you see in your bank, they are not paying you anything. They are not even giving you any interest and what have you. So it's an area that you can actually go ahead and pick it up and use it for the purposes of investment. So these are just but examples of the areas where this money market fund actually differentiates itself or is distinctive compared to other areas of investment. Now, the point is this. Now, this is a Sacco and this is an MMF fronted before you. So which one do you pick? So you have to understand the different parameters. First of all, MMF or money market fund do not offer loans. They don't give you loan. All right, they don't give you loan. Okay, so but MMF, they give you the returns of quite a good returns. Actually, it's above the inflation, so you can actually pick one MMF and be able to go with it along the way. So because MMF, again, you can be able to withdraw your money any moment you want. Again, with MMF, they are quite safe in terms of the investment, because the areas where they're supposed to invest, these are quite stable areas where you as well can be able to invest. All right, maybe in future I'll be able to talk about the FDS. Maybe I've actually talked about the treasury bonds and maybe talk about commercial paper. And on the commercial paper, I don't think that we can be able to invest as an individual. Okay, so anyway, the point is this. So what guides you to picking Saccos or MMF? Those are the guiding principles to go ahead and do so. Now, the question I know you're asking, probably this is the first time you're watching this video, you're asking, how do I get into a Sacco? Sacco is very simple to get started. Just pick a Sacco that I always tell you, pick a Sacco that you know has an institution backing that specific Sacco. Saccos are regulated by SASRA. All these 2 areas of investment, there must be a regulation. SASRA is the body that regulates Saccos. MMF, it's actually a body that's regulated by what we call the Capital Market Authority of Kenya. So if before you actually invest in any of this, if you want to invest in MMF, go to the CMA website, be able to verify that given name of that specific MMF company, so that you'll be able to verify whether that company is actually regulated. See, you don't want to go and invest in a company that you don't even know, you've never even heard of it, but they just show up from nowhere and they're promising you high returns, and then after some time you actually go ahead and losing all your money. Again, consider where your MMF is actually investing the money from. Why? Because if they are required to invest in FDS, T-bills and commercial paper, and these guys are putting your money into real estate, these guys are putting money into common businesses, these guys are putting money into betting. So what does it mean? It means that you're going to lose your money. And if they put those money in those areas, obviously they will promise you good rates. Okay, because those areas where they're putting this money actually has high returns, so they tend to give you or promise you high returns, or high returns actually, and then from there it means that all of you will actually drain into that place because they're giving high returns. And then after some time, in Swahili in Kenya we say kitakuramba, meaning you're gonna have a very hard time, because these guys, even the company, can actually go ahead and collapse. Okay, both of them or all of them, they are actually taxes. But the good thing is this. Now, this is another great difference. Now, Saccos usually pay less taxes compared to MMF. Saccos return or taxes that you have to pay is actually 5%. Okay, 5% is the tax that you pay, and on the MMF you pay 15% withholding tax. All is withholding tax. Even here is withholding tax. So you pay here, you pay 15% on MMF. On Saccos you pay 5%. So what does that mean? It means like, hey, with Saccos you are kind of favored a little bit, because the whole essence, the foundation of Saccos were actually to be less taxed, so that at least people can uplift themselves and what have you. But then not all countries have these things called Saccos. Even the table banking kind of a thing is, sometimes I usually feel like it's like it originated in Kenya, but I stand corrected if you know the origin of this thing. So Saccos, that's why they tend to attract low taxes. They also pay taxes, you know, because I don't understand what happens with the MMF. I think the companies pay the taxes and then the investors pay the taxes, like there is a double taxation, but it is what it is. Welcome to Kenya. That's how we do our things. So the point is this: you can pick any you want, and I've actually drawn a difference between the Saccos and MMF. So the point is this: all of these don't require a hefty amount of money to invest, so there is no excuses. You can be able to invest as low as 2,500 on a Sacco. Again, when it comes to Sacco, the another difference is this: with Saccos, you need to do monthly contribution each and every time. Your account must be active. If they say minimum is 2,500, you have to do so each and every month, each and every month. With MMF, you can invest today, you don't have tomorrow, you don't have next month, you don't have the other month, the other month, the other month, then you put another month. So there is a flexibility with investment as far as the MMF are concerned compared to Saccos. So those are just but examples of the difference that you have to consider. So if you have that continuous flow of money, then Saccos will be good, and you're looking forward into having what we call a loan in future, then Saccos will be good. And again, if you do not have a continuous flow of money, you're this kind of a guy. In Swahili we say pesa zako ni za kushtukiza. You get today, tomorrow you don't, the other day you have a lot, then MMF will be good for you, because there are no penalization if you do not, put your money next or something of sort. There's nothing like you have to put it like continuously or something of sort. With Saccos, that one has to be there, because that is the track record that they're gonna use when they're giving you loans and all those kind of things. So anyway, what guys, now if you put all those considerations into place, then you already know what fits for you. And don't forget one thing: this is the place to be for you to get all the ideas about investments. And guess what? I do have a booklet on MMF. It's 280. I do have a booklet on Saccos. It is 280 as well. You can grab any or both of them, get the information. All this information is actually shared there. You can be able to pick and be able to proceed to the next level. How you can be able to get started with the MMF, and as well how you can get started with the Saccos. For now, it's a goodbye. But don't forget, like this video, grab my number on there. How to get this booklet, grab my number from the description of this specific video. Give me a call or text me on WhatsApp. We get started. For now, it's a goodbye. See ya.